Welcome once again to the Real Money Show, hosted by Guildhall Wealth Management. Folks, this week we have a special treat. We are going to be interviewing Keith Neumeyer, CEO of First Majestic. And for those of you that don't know much about Mr. Neumeyer, he is certainly somebody we find very knowledgeable about the silver market and silver trends in general. So you do not want to miss this show. It's going to be a very important interview that we do, and part of our ongoing sort of attempt to bring more voices in this community out to you, the listening public. In addition to that, Jeremy and I are going to be spending some time talking about our good friend and friend to the Real Money Show, Paul Craig Roberts, who wrote an article on the 20th of March called America is Losing Its Economy. Now, folks, there's a lot going on, but one thing we know for certain is that it's so important to understand this from the perspective of what is related directly to silver. Silver and gold, those are our first choice metals, and we have spoken about them at length for years and years and years. Keith Neumeyer is a fantastic individual. He's worked in the investment community since 1984. He began his career at a number of Canadian national brokerage firms. Mr. Neumeyer moved on to work with several publicly traded companies in the resource and high technology sectors. He also was the original and founding president of First Quantum Minerals Limited, and he also founded First Majestic, which we're going to be talking about today a little bit, back in 2002, and First Mining Finance in 2015. Mr. Neumeyer also has listed a number of companies on the Toronto Stock Exchange, and as such, you can imagine he has an extensive amount of experience dealing with the financial, regulatory, legal, and accounting issues that are relevant in the investing community. Mr. Neumeyer was the winner of the Ernst & Young's Entrepreneur of the Year Award in 2011 for the metals and mining category, and we want to welcome him to the show today. Jeremy will be conducting the interview, and we will say hello to Mr. Neumeyer.
Welcome to the Real Money Show, Keith. It's a pleasure to have you here. And
Hi, Jeremy. It's a pleasure to speak for the first time.
Excellent. And we'll just jump into some questions right away. We've been listening to a lot of other interviews that you've been giving, and one of the things I notice is that you call silver a strategic metal. And I was wondering if you can expand on this a little bit, perhaps discuss where you are seeing demand for silver coming at this moment.
Well, I came up with that phrase, several years ago now, and I've heard it repeated in a couple of circles, and I'm hoping it's going to catch on, because, of course, silver is precious. We all know that. But, I don't think most people actually know, how critical silver is in the day-to-day lives of the human race. And the uses of silver are continuing to grow, and, we're mining 9-to-1 currently on a global scale, which is pretty scary. You're mining 1 ounce of gold worldwide for every 9 ounces of silver, and silver is depleting very, very rapidly. The above-ground supplies are depleting, and mine supply has been dropping. We've had 3 consecutive years of mine supply dropping, and it's getting pretty crazy out there. If you're an electronics manufacturer, an Apple or a Tesla or a Samsung or Sony or one of these big manufacturers, you got to be worried. I think just based on the supply demand fundamentals of the metal, and that's why I call it strategic, because everything that we're doing as a human race to go green and everything we're trying to do to re-electrify the planet in other ways than oil and gas are going to require a lot more silver than we're currently mining.
Yeah, I think that's interesting as well. When we look back, for example, at the run, the first run to $50, there was lots of silver above ground, and companies like Kodak and maybe Tiffany's or whatnot probably weren't thinking about panicking at all. They knew the product was there, but I do wonder if these type of major industries, Apple or tech companies that require so much silver, are starting to think, well, wait a minute, they stockpiled back then. Now they don't have a stockpile. I wonder if they're even paying attention. Would you know at all?
Well, we're getting approached by the end user over the last couple of years. We've been getting approached more and more, which is a little bit unusual. The mining sector and the banks, have this relationship whereby, the mining sector just sells their metals into the banking system, and the banking system then, finds buyers for the metals, and it works very well, and the miners get paid, and the end consumer gets their metal, and it's all a fine system. There's flaws in the system, of course, but that's generally the way it works, and it's been working like that for decades and after decades. And with the end consumer starting to come directly to the miners, it's interesting. It's just changing the space. And we've seen a couple of traders leave Glencore and open up a brand new exchange, which was just in its infancy. It's in its first year, and we're just looking at it now, whereby we could potentially, if we decide to start using this exchange, start selling our metals directly to the end consumer, bypassing the COMEX and the other exchanges around the world. So it's interesting the direction we're going.
And with you have talked about that as well, the idea that the exchanges might be changing, the money, the way the system is set up today could be changing. You're mentioning a couple of those changes just now. So with that said, looking for some price targets on the metal. Of course, you're on record several times, but where do you see some price targets for the precious metals in the next several years? And what do you think would probably need to happen for us to see those ultimate breakouts that a lot of investors in mining companies as well as the physical are looking for?
I'm on record, calling for triple-digit silver, and the math is relatively easy, and I think sometimes when it is so easy, people doubt that it becomes actually possible. But when you're mining 9 to 1, why would the ratio on a supply-demand fundamental basis not be 9 to 1? That's where it should be trading. That's where we're mining. Historically, if you go back 1,000 years, the average is about 15 to 16 to 1. It's only in the last 40, 50 years when the big banks started trading the metals commercially, in the early 70s when the COMEX was formed and the commercials started trading options against the metals. That's where the price of suppression really started. And, how long can that scheme really last? Because ultimately, back then, as you said earlier in the interview, there was a substantial amount of silver on the ground where they could use to, hedge against their positions that they're taking, in the commercial marketplace. But today, with such tight supplies, and most of the metal now is just with ETFs. There's actually very little above ground silver supply outside of the ETFs. So if you're short and you've got to deliver physical metal to the end consumer and you can't get it, which I think is exactly what's going to happen, then it becomes a real issue, and that's when it becomes headline news. And that's what I think the catalyst will be, because it's the markets, as we know, are driven by headlines. They're not driven by fundamentals. We wouldn't see the Nasdaq or the S&P trading at the levels they're trading today if there was any fundamental reason behind the market. They're just trading yield. They're trading what's up, whatever's green on their screen, they're buying. And whatever's red on their screen, they're selling, because they're all momentum traders. And you've got, several thousand hedge funds around the world all doing the same thing. And that's how you get 1,000-point down days. When on the Dow, back in January, we saw consecutive 1,000-point down days, because that's when all the computers, all the people are doing exactly the same thing. And, it works both ways. So, right now, the metals are out of favor. Gold and silver. I just came back from the Bank of Montreal mining conference, which is a big institutional conference held every February in Miami, and the talk of all the big institutions, and this is all the big money. There's more than $1 trillion under management under the roof of this convention, and they're all of them are talking about nickel and cobalt and copper. No one's talking about gold and silver yet. None of these high tech solutions for electric vehicles or whatever technology that you want to talk about wouldn't operate without silver. This is where I get kind of lost in the whole headline stuff that's written, because I continually hear that silver's the poor man's gold, and it's completely the wrong way of thinking about silver. We started off this call by saying that silver is very strategic, and you couldn't mine a Bitcoin without silver. Think about that for a sec. You couldn't drive an electric vehicle without silver. And I had a fund manager talking to me about it, and her eyes were glazing over, and she goes, "What do you mean? By saying you can't drive an electric vehicle without silver?" I says, "Well, what's an electric vehicle? It's a computer on a stack of batteries. That computer has 3 times more silver in it than a regular normal fuel combustion car. So as we produce all these electric vehicles, and then later fuel cell vehicles, and all the robotics and all the flying cars and all the other exciting things that we're going to be adopting over the next several decades, that's going to be very, very supportive for the price of silver. So I think we will. And it sounds crazy when you're trading at $16.50, silver, and barely can even get over $17 to call for triple-digit silver, but that's where we're going, and I think it's going to be based on pure supply-demand fundamentals.
Keith, this is Darren Long from The Real Money Show, and I'm curious if I could ask, what, in your opinion, is the percentage of silver coming out of the ground right now via primary silver mining operations around the world?
Yeah, it's not much. It's it's about 30% from primary miners. So you're talking about the BHPs and the big guys, the Phelps Dodges. These guys, they produce some silver, because they've got big copper mines, they've got big zinc mines. So there is some silver coming in those operations for sure, and it works out to about 70% of silver comes from secondary production.
And if you were to look upon the market as a whole, and having heard what you just said about the COMEX and bypassing the COMEX, I think one of the great misunderstandings as far as it relates to pricing is that every day an individual comes home who may want to, let's say, for example, own physical silver, may want to speculate in physical silver. Really, that's what they're doing. And they hear the price announced every day. And lo and behold, for years and years and years, despite this fantastic argument that's being built behind the scenes of everything you've discussed already, the price of silver stays stagnant and somewhat in the same kind of range without any major markup. Now, knowing that there is always events that drive the market, in your opinion, is it possible in the near future that we would be able to bypass the COMEX and thereby essentially get a different day-to-day price on silver?
Well, we're a pretty small player, in the whole scheme of things. At our level, we're post acquisition that we're just doing right now, which will close at the end of April. We're about a 30 million silver equivalent ounce, it's 30 million ounce silver equivalent producer in an 800 million ounce market. So it's from the whole effect on the market. From First Majestic's point of view, we're a pretty small player. So you need all the big guys to really want to go down that path. And it's not going to start in silver. Silver's a very small market. You look at 800 million ounces trading at let's say $17 an ounce. It's less than a $16 billion market. So you're talking about a pretty tiny market. So these changes of pricing commodities in different ways than they're currently being done is going to be directed by the big conglomerates, and it's going to be done, outside of the exchanges, and which I think will ultimately happen. But silver will be, in my view, one of the latter metals to actually go down that path. But it's still, it is frustrating. I'm a big supply-demand fundamental believer. When I put First Majestic together, silver was $5 an ounce, and I predicted it would hit 50. It did. I didn't think over the next 5 years it was going to go all the way down from 50 to 13.30, which was its low in January 2016, which is pretty shocking for everyone. Now it's recovered. It's struggling, to get over 18 now. But I think it's just a matter of time. Everything is sentiment driven. Everyone's following, zinc and nickel and cobalt and as I said earlier, once people actually figure out the fact that all these fancy electronics that these rare metals, they call them rare metals, cobalt, for example, or others, are going into these technologies. These technologies simply wouldn't work without silver. And that story will get out, and the market will be driven by headline news that's going to affect this market, because it's surely not being priced based on supply-demand fundamentals.
Yeah, it sounds like when you put together the fundamental and the package and the idea that, okay, we're mining it at 9 to 1, it's currently trading around 80 to 1, give or take. You're saying that the supply in the ground is dropping. Is that an indication of, for example, like a peak silver idea?
Well, I don't know about that, because it all comes down to price.
Right.
Current metal prices, there's not too many miners making a bunch of money. We're kind of it's a break-even kind of business. A little bit of profit here and there.
Mm-hmm.
We're still grinding down our costs. And we're making buy, but we're not making the profits really required to expand the operations, and that's why we've seen 3 consecutive years of reduced silver production worldwide because of the price. And all of a sudden, $100 silver happens tomorrow. of course production is going to go up because that's going to make a lot of lower grade mines that are currently uneconomic all of a sudden economic. But my thesis is that's exactly what we need because we don't currently have enough mine supply to supply the demand that's coming, and that's why we've been in multiple deficits. We've been in over the last 30 years. There's only been a few years in the last 30 years that we've actually had a surplus supply, and quite honestly, I didn't even believe some of the numbers that some of these groups put out because I've talked to refineries and I've talked to the big electronics manufacturers, and I've asked the refineries how much metal goes through your system, and how much a cell phone manufacturer, how much silver do you consume a year in your cell phones, and this is top secret information. They don't want anyone to know it. So when these analysts come up with their supply demand fundamentals and they plug in all these numbers, they don't have a clue what's being recycled. They don't have a clue what Samsung is using or Tesla is using. They just plug in numbers as best guess scenarios, and it always matches at the bottom. There's a magic balancing on the bottom line, and then that's what they call the surplus, or that's what they call the deficit, obviously, which is your fixed number at the end. It's all nonsense, but I know from being in this industry for 15 years that we've never had problems selling silver. The demand is increasing quite rapidly, and that's what excites me in this marketplace. And unfortunately, it's not showing up in price yet.
At the same time, and what's great for First Majestic is I know you're working on ways to make it cheaper to mine so that you're prepared for when the market does rise and you can rev up much quicker than, let's say, starting up one of those older mines, as you were just saying. So can you let our listeners know a little bit more about First Majestic and First Mining Gold and how they can get some more information about those things?
Yeah, you're right regarding, we continually try to improve our business. I think the mining sector as a whole is changing. It's really, whether we're forced into it or not, I guess there's a debate there to be had. But, obviously we are a large company. We're publicly traded. We've got 4,100 employees. We've got over 50,000 shareholders. So we've got a lot of responsibility to make sure that, we do our best to turn a profit, and we do that by automation and reducing input costs by a variety of different means. And the mining sector, in my view, is going through quite a change right now because it's been very, very slow in reacting to new technology. And we've seen, today the United States produces more oil today than I think they ever have, for at least for several decades, anyways. And that's got a lot to do with what's got solely to do with new technology. And the mining sector is just now starting to adopt some technology. First Majestic is actually one of the leaders in this area. We're small, we're not a huge company, but we do what we can to reinvest capital into quite exciting technologies, which we think are going to improve our operations quite dramatically over the next couple of years. And if you look at our presentation on our website, people want to go to our website at firstmajestic.com. They could pull up the PowerPoint and go into there and look at some of the interesting technologies that we've adopted over the last 5 years and some of the technologies that we're adopting over the next 2 or 3 years. And we spend a lot of time telling investors about that because we think it's important. If silver prices don't want to go higher and then they're going to stay in the $17 range for the foreseeable future, we've got to continually look for ways of grinding down our costs. I think it's critical that we do that. And it excites me because I see the efficiencies that it's creating. So, again, the website's there for people to look at. First Mining Gold, you did mention that I'm the chairman of that company. I founded that company back in 2015. April 2015, we went public. They're both quite different animals. First Majestic Silver is the second largest silver producer in Mexico. It's got 6 producing mines with their 7th mine just in the process of being purchased. So by the end of April, early May, we'll have our 7th mine portfolio, and then on an annualized basis, we're about a 30 million ounce silver equivalent producer, which makes us number 2 in Mexico, makes us one of the purest silver companies in the world, and obviously one of the most leveraged to the price of silver. And when silver prices move, our stock tends to do very well. First Mining Gold is gold, obviously. most of the assets are in Eastern Canada. They've got 25 different projects, some spread around northern Mexico, but the core assets are really in Ontario, where we've got, three of, I think, one of the, probably the best gold portfolio there is in at least the junior mining sector. And these three projects in Ontario, we believe, will all be producing mines over the next 5 some odd years. And then, that's a pretty exciting place to be at. And the stock is trading at 52-week lows, which is unfortunate. There's been a new CEO that I just appointed just about a month ago, and he's getting his feet wet, and we're just working to build those assets and develop them and grow them and just keep advancing them and de-risking them and getting them into production over the next several years.
Well, we will put links to both of those sites on our website at guildhallwealth.com through The Real Money Show. So anyone who wants to listen to the podcast, they can find that information. And if you don't mind, we'll put up your Twitter address as well. How's that sound?
Yeah, the Twitter account would be good. I don't do a lot of tweeting, but like news releases or interesting information that I find out there, I do tweet out every once in a while. So.
Excellent. Well, Keith Neumeyer, it's
happy to have more followers.
Exactly. Keith, it's been a pleasure to have you on the show today, and we look forward to hearing back from you soon.
It's a pleasure chatting with both of you. Thank you.
Thank you.
Well, that was an amazing interview, Jeremy. I'd like to say that Keith Neumeyer is probably one of the most knowledgeable people I've had the opportunity to speak with in the marketplace as an analyst, as a CEO, as somebody who has been in this silver and gold and mining world for so long, since the 80s, and certainly very knowledgeable when it comes to talking about what's happening. I think that in the third segment, we're going to spend some time also talking about colored diamonds and an article from Paul Craig Roberts, our friend to the show. But it is interesting that he pointed out a couple of very distinct things that are happening right now. One, he said silver is coming out of the ground only at 9 ounces to every 1 ounce of gold. So in and of itself, that's amazing. Secondly, how can you not pick up on the idea that silver is everywhere in our lives? Now, we've talked about usages till we're blue in the face over the years. Many, many shows on usages only, but it never does it quite enough justice, because this is a time and space in which he's saying, look around you. Everything you use and touch, and everything we're going to use and touch technology-wise going ahead into the future, is going to be impacted by that price of silver. It may only be a small impact, but it's still going to happen. And in essence, there's nothing that can change that, because there's nothing that can replace silver and what it does.
And I think with that, there was this hinting in some ways of, if this story of silver really gets out and things really start to move in that market, and those mining companies can't ramp up the production of silver fast enough, that you could potentially be in a position where silver does go no bid, where people are not willing to sell it at $50, $60, $80. And these companies are working as fast as they can, but not fast enough to actually start getting more silver that's needed out of the ground to satisfy the demand that's coming. And I think the other thing that he was also starting to discuss and hint at is that when you look at the stock market and where people are putting their money, he was suggesting that they're putting their money into things that are already high because it's the fashion of the day. But eventually, trillions of dollars is going to be sitting there going, well, where do we put our money next? And that's where the mining sector and the physical gold and silver market that are undervalued right now start to look pretty good.
We're going to post that interview, folks, on the podcast. You'll be able to access it in addition to today's show and tomorrow's show. And if you're listening on Sunday, it will be yesterday's show. But again, we'll post that up on the podcast and put it onto our website. Certainly, we will make certain that you have great access to that interview as a standalone. It will be downloadable, and you can put that anywhere you like into any unit and listen to it at your convenience. What a great interview that was, Jeremy. I'm happy that we had him on there. Now, folks, when it comes to silver and gold, understand nothing is more important than taking action once you have the knowledge. If you understand that silver right now is sitting at 80 to 1 against the price of gold, it means it takes 80 ounces in order to equate to 1 ounce of gold in value. It is very undervalued against historical norms. Looking back at this bull market we've been in since 2002, the average is in the 50s. It's 55 to 1. So even if we went back to 55 to 1, that's driving the price of silver towards the $24 range. What a bargain to be able to own and stack some silver. Get into an allocated financing account here, folks. This is an opportunity to use other people's money. You can put down as little as 45% of the total metal value you want to invest and own. We can get that set up for you very quickly. It can be done online. You can submit by wire transfer and have that account up and operating and visit your allocated, segregated, serialized bars. We can do 100-ounce bars there in that account. We can also open up a gold account and do the same thing. 1 ounce, all Royal Canadian Mint product, and it is tangible, folks, because that's the best way you can own and hold silver and gold. Now, Jeremy, when we come back in the third segment, let's talk a little bit about some diamonds. Let's talk a little bit about putting it all together. I want to dwell a little further on that idea of a strategic metal and what that might mean going forward, and certainly spend some time helping people to open up accounts. What do you say?
That sounds great, and I think along the lines of this of the strategic metal, I think we should look at that article we were going to discuss about why central banks view gold as a strategic metal.
I brought it with me. We'll do that as well. All here on The Real Money Show, folks. Get into the market now. Remember, March Madness means we are doing away with HST or the tax from your province on all of our colored diamonds right now. We'll cover that for you. Take a look at those online through guildhallwealth.com. We'll talk a little more about that. We have more updates on the Argyle mines coming in the next segment. We're almost finished a new article on the Argyle situation, and the closing date might shock you and might help you to make that decision to get this into your portfolio. Gold, silver at guildhallwealth.com. The newsletter, all on the website. The number to call, 1-877-78-SILVER. I'll say again, 1-877-78-SILVER. You are listening to The Real Money Show with Guildhall Wealth Management on Global News Radio, 640 Toronto.